Exercise 10.8 gives us an opportunity to play with the various dates attached or associated with dividends. On March 15th, American Eagle Outfitters announces a 12.5-cent per share dividend for its shareholders. They have 210 million shareholders. Each dividend is a 12.5 cents. You multiply that out, that comes to 26,250,000. So on March 15th, the declaration date, they say we're going to pay $210 million, 210 million shareholders, 12.5 cents each, for a total of 26,250,000. And that's an immediate creation of a current liability, dividends payable. March 30th is called the date of record, or the recording date. And that's the date that the shareholders have to notify American Eagle who they are and where they are so that they can send out the dividend. There is no entry needed for that day, so we don't have to do anything that day. The accounting office has to collect all those names and addresses and make and keep that record so we can send the checks to the correct people. Then on April 13th, that's the date, that's the payment date, and that's when we're actually going to send out the checks. Notice we now come to dividends payable, not dividends, because we already recognized that current liability on March 15th. So we're going to debit the dividends payable for the 26,250,000 and credit our cash for 26,250,000. So you need to know the declaration date, journal entry recognizing an immediate dividend payable, it's a current liability. March 30th in this case is the date of record. That's when the shareholders have the opportunity to let the company know who they are and where they are so they receive their dividend check. And then on the 13th, that's the payment date, and we actually send the money out on that day.